Alright, hello and welcome to Camel Finance. I'm your boy Camel, and the power of the spoken word is indeed very substantial. I put this out on Thursday. I said, look, I might not be able to make a video on Friday because all my feed is 100% FTX. It's really annoying. I said I could try to find something else, but it looks pretty bleak at the moment. And unless you want me to cry more about the FTX thing or get angry at the price action, which is just not in my nature, then I wasn't going to be able to make content. So I didn't post yesterday, although I did manage to find all of this stuff. This was supposed to come out yesterday, but my poor mum, bless her, she went to the beach with some friends. She managed to trip over, broke her shoulder, ended up in hospital. So I had to go and get the dog. Me and my brother had to drive over to that beach and pick up her car because she couldn't drive it home. And we couldn't leave it there for extended periods of time. So I had to go and do all of that. And that was why we didn't get a video out yesterday. It wasn't because I couldn't find anything. So anyway, you were supposed to see this yesterday. I should be back to regular uploading schedules as of today and onwards. But if for some reason I go quiet for a day, that will probably be why. I'll probably be doing it'll probably be something to do with taking care of my mum. Look, big question here. If 8 billion plus was lost by Alameda, then who won these trades? Right? Where did it go? Someone must have it, right? That's a good point. Apparently SBF used some of these customer funds to buy property for himself. So at least somebody got a nice house out of it. Do you remember these two words right here that I said I couldn't say? And apparently that was supposed to be due out on Friday. Well, I haven't been looking for it, but I did find this. I thought this was quite funny. I should say that this is fake. Okay, this is fake. You can see here, this is like been photoshopped with this weird bend of the wood. So, and the original photo is somewhere down here. Here you go. But I thought that was funny. Anyway, come on, Camel. We're better than this. Look, at the end of the day, the FTX thing's horrible, but look at this history of Bitcoin lost on exchanges. You can see down the bottom, FTX at 70,000. It's not even the most substantial one here. Mt. Gox, significantly higher. Bitfinex, significantly higher. This is why we keep our Bitcoin off of exchanges, even Celsius, way more than FTX. This is why we don't trust the exchanges. This is why I'm kind of over this FTX thing. So let's get out of here. Look at this. This is absolutely incredible.
Imagine if your home electronics could earn you money. What if a heater could keep you warm and earn you money? Heatbit does exactly that. Heatbit is an electric heater that earns you money by mining Bitcoin. Mining chips are used as the heating element inside the Heatbit. The chips run complex calculations and generate heat as a result. If a usual heater consumes 1,300 watts of power to generate 1,300 watts of heat, Heatbit does the same, but gives you earnings in Bitcoin at the same time. User tests have shown that thanks to the active ventilation, Heatbit performs better than many other heaters on the market. Under full load, Heatbit runs up to 14 trillion calculations per second, earning $3 to $4 US per day as of today. Plus, it's easy to use. All controls are done through the Heatbit mobile app. All you need to do is connect to your Wi-Fi network. Heatbit is ready for mining and heating your home. You can control the mode and see stats on the app. With 1,300 watts of power, the same as a regular heater, Heatbit can keep 140 to 170 square feet of space warm. Our product, engineering, and design teams have been working on Heatbit since the beginning of 2020. We are very excited about bringing Heatbit to you.
So there you have it. Pretty crazy, right? You can heat your house and mine Bitcoin at the same time. $3 to $4 a day is based on April 2021. So I think right now it'll be more like $1 a day. I think you'd be paying significantly more for that in electricity. But eventually, I guess, as these rigs get more efficient, this will likely become something that is used at a much larger scale at least. This camel you can now find on Rumble, so if you haven't been on Rumble, go and check that out. It's definitely a bit more clunky than YouTube, at least as an uploader anyway. But if you look at the video titles in the comments, it will tell you it's much more friendly and open to free speech. Dollar up, yields up, VIX up. The beginning signs of a reversal are here, according to this maverick of Wall Street. Are we looking at the same charts? Dollar up, I mean, technically it's up a little bit, yeah, but this was a 7% drop in 7 days. Okay, so what were we expecting it just to continue down? Or I would not say this is up as of yet. I think, you know, I've said this before, dead cat bounce to 107, 108, even 109, and then a rollover would probably be most likely. I would say if we get above 109, if we get above this level here, then I'll entertain saying the dollar is up. But for now, I don't think we're looking at the same chart, to be completely honest. He also says yields are up. I'm not picking on this guy. I saw a lot of panic, actually. I saw a lot of panic on the Thursday. People saying, that's it, the market's topped. Yields spiking. I saw someone say yields are spiking. Like, again, are we looking at the same chart? Yields are not spiking. After a move as big as this, there's going to be a reaction. Everything is fine, and these are going to continue to break down as long as we get this dead cat that bounces like this. So if that happens, then risk is going to come on. But obviously, this was never going to just go like this, was it? So things don't go up or down in straight lines. Remember that. Also, the VIX. Again, are we looking at the same chart? Are we looking at the same chart? I don't think we are. I think, given we've got 1, 2, 3 wicks here, I think we can adjust this line to here. I think this can be our breakout level. Something like that. So again, I've been saying that we should come back down into this region. It looks like we're going to do that. And if we can break out from down here in the 20-ish neighborhood, then this becomes a long, very high probability long. And the stop will be very small relative to the potential upside. Actually, whilst I'm on the VIX, I think it's important to flag this. Look at this. Look at this fractal. This fractal in blue here is from the 2008 financial crisis. So if any of you are bearish out there, okay, this would be your bearish fuel, so to speak. You can see here that we've been tracing this very, very closely, then up, then coming back down. So if we're going to get a top in the markets, we should get this massive spike in the VIX. So in the bullish case, we're bound to get a pullback in the not too distant future. In the bullish case, we want to see something happen like this with the VIX. But if we trade this breakout that I just showed you, I'll go back to that chart in a second. If we trade the breakout of this and we continue to push this trade and we take out these highs, then we have to be open to a massive move like this. And a massive move like this, clear of 70, completely invalidates the melt up thesis. Okay, we will see new lows. We will see significant new lows in equities. I shudder to think what will happen to Bitcoin and crypto if this scenario plays out. If you are bearish on the market right now, this is the sort of thing that should have you salivating. Okay, but again, if we can break out of here and not take out these prior highs, or at least equal and then come back down again as the equities rally, then I don't think there's a problem there. But like I said, if you're a bear, this is exactly what you should be salivating over. So this is why it's important we're going to be taking this trade to hedge the equity exposure and also to be exposed to volatility in case this is going to rocket from 20 to, I don't know, 50, 60, 70, however high it goes. But as of right now, I do not see a spiking VIX. Let me know if you do, because we must be looking at two different things. Bitcoin has bottomed, according to TMG. Maybe, maybe not. I honestly have no idea. I don't know how anyone can have any idea. I know a lot of people have expectation of lower. I personally have no idea. We'll wait and see what the charts tell us to do. Is this real? If it is, it's really bullish for Bitcoin. I don't think this is actually real. I think someone has created this for illustrative purposes. However, CBDCs are coming, okay? We know that the US has rolled out a 12-week pilot as of this week just passed. The European Central Bank is proposing a digital euro for the following spending restrictions. These are absolutely things that could be applied to the digital euro, okay? Users could be allowed to spend $50 per transaction maximum. They actually could hard code your CBDCs to prevent you from buying large things. They could also say that you've got a maximum of 1,000 euros a month spending limit. 50 transactions a month they could limit you to. Just for example, these numbers could be any numbers, but this is obviously something that, this is a restriction that does not come with fiat currency or Bitcoin. Obviously when they replace the fiat with this is you're going to be giving up all of your freedom and privacy. And they can impose a $3,000 maximum euro holding. So that means if you save more than this, they will either set it to expire within 2 weeks to force you to spend it, or they can just take it straight from your account. I have seen this written in the actual white papers for CBDCs, so don't think, oh, they could never do that, because they are literally planning to do that. Privacy and other concerns. Look, a CBDC could be programmed so that it can only be sent at government-approved merchants, and perhaps those merchants will want to see a QR code or proof of something else more sinister. A CBDC could be programmed to expire with within a certain amount of time. Like I just said, if you don't spend it by X, then you'll lose it. And full anonymity, which is offered by cash, does not appear a viable option. And this is a direct quote from Christine Lagarde. Again, I think this is likely all a illustration from this person here, but believe me, I've seen most of this stuff, like I said, written into the white papers for these CBDCs. All of this sort of thing is coming. So you better opt out. You better buy physical gold, physical silver, and physical Bitcoin. I found this and it blew my mind. This led me down a rabbit hole. I thought I'd share this 1 minute clip for you, and then I'll leave you to go and chase this yourself if you want to.
The UK got a finance curse?
Is it a trick question? Because the UK doesn't have finance. The City of London has, and it's not part of the UK.
Good answer. Good answer. It's international, he's right.
The City of London is outside the United Kingdom. Do you know that? It's really shocking. And therefore it's also not part of the EU, which explains although it couldn't be part of the EU because you have to have democratic elections, and the City of London doesn't, right? It's the banks that have the votes, right?
Right.
Per staff, you know,
I
the voting
never
system.
knew
How
that.
do you start unpicking this puzzle?
I never knew that. That's a very useful piece of
And
information.
of course, it's not part of
It's a
the
pretty
UK.
dangerous piece of information.
And it's not part of the UK because the Queen is not allowed to enter without permission. She's not the sovereign, therefore it's not part of the UK. You know, and of course that's since 1688,
I have to make a note.
since the foreign invasion.
The UK got a finance curse?
So I heard this and I thought, no, there's no way. There's just no way. This can't be the case. But I went and did a bit of digging, and you could see that essentially this goes all the way back to around 1215. And what happened was there was a bunch of sort of rich bankers and lawyers and all of this sort of thing. They wanted to make London like this posh place. And there was these people they referred to as the grubby hillbillies, which were basically people that had money from sheep and from pigs and from farming. So they had plenty of money, they had plenty of land, but they were not the sort of suit-wearing, cigar-smoking, business-dealing type of people. They were quite rough. And therefore, the bankers and these sort of businessmen in the City of London created a 1 square mile boundary, which was bounded by a Roman-built wall. And they decided that the grubby hillbillies could have the rest of the country, and they would have this 1 square mile to build all of the finance centres in. And that still remains today. And that remains today. Even the Queen is still not allowed in the City of London without permission. You can look into this in your own time. There is even a Metropolitan Police, which polices the Greater London. And then there are the City of London Police, which police the square mile in the centre. And the reason for this is because they are governed by different laws. They're under different jurisdictions. I did not know this. I was speaking to plenty of people about this recently, and none of them seemed to know this. This really blew my mind. So anyway, if you want to see this, a 10-minute version of that clip I just showed you, to give it a bit more context, this is what you need to type in from this channel here. So you can go and see that if you want to. The quality is really bad, but you don't really need to see anything. Also, this guy, Professor Richard Warner, I had never heard of him before, but he does really, really great work. So I would recommend going to check him out as well. Back to cryptocurrency, OKX is going to delist USDC Solana and USDT Solana token networks. So Solana's probably going to zero at this point. I'm not going to play the sound on this because I don't know if it's copyright. But here are the Ethereum team and Vitalik doing this crazy badger dance. And I'm sure if and when Ethereum goes to zero, then we're going to look back on this and say the warning signs were there all along. JT says, look, I'm tired of trying to tell you that this is the time you buy. You can give him a million excuses why you shouldn't, and he'd agree with them. But if you're into making money, you just have to pinch your nose and hit the buy button. He says he can't make you, but just don't say I didn't tell you so. Is an all-time high possible in 2023 for Bitcoin? Yes, it is. It is indeed. Go and check my last video. I showed you some crazy looking charts, but they're most likely going to turn out to be correct. Look, the equity put-call ratio is officially higher than even in 2008. Look at the state of this, okay? Here it is viewed a slightly different way. Put-call ratio is 1.46. It's even higher than the C19 plunge that occurred in March of 2020. Even an Uber driver is bearish on stocks at the moment, just like in December 2021 when the Uber drivers and shoeshine boys were recommending people go out and buy stocks. This is exactly what a bottom looks like in terms of sentiment and in terms of positioning. Yields are up slightly, but watch the junk spread, which is the blue line coming down, which is the best risk-on signal for stocks. As you can see here, rolling over. The orange line, the yields, will likely roll over too. So we've already kind of covered the dollar. Dead cat bounce is what we're looking for. And of course, we're looking to see pretty much the same thing in yields, looking to get a lower high and roll over in yields. And there should be no problem there. Geo's starting to look a bit more constructive. We need to get above this red line for me to be really, really bullish. But as far as I can see, this should continue to press up. This is a constructive look. We've broken out, we've become straight away into profit, and that's what you want to see from a breakout trade. You don't want to break out and then be hanging around break even or taking a loss. If it's going to break out and go, a sign of super performance in stocks is that when you break out, you are immediately in profit, and this thing should continue to rip higher if this is going to be a super performing stock. Remember my Wyckoff chart? This looks a bit strange, doesn't it? Let me straighten this up. Is this still a possibility? Are we going to do something like this? I wonder. So that remains to be seen. All the while we're above this low, I'll hop into the other Bitcoin chart so you can see what I'm talking about. All the while we're above this low, then I think we can say that we're likely going to go up. But of course, if we lose this low, then this is going to get pretty bearish pretty quickly. But I'm not bearish until we lose this low. All the while this low is in play, then I think the path of most pain is higher. That remains to be seen. I think things will get incredibly bullish incredibly quickly if we can get above this blue line here. So, and that's where I'm looking to get long as and when we can do so. I'm not really interested in Ethereum or anything else until we can confirm that spring for Bitcoin. As I flagged, we had a breakdown of the trend line on the way up. We are now waiting for a breakout of the trend line on the way down. Currently short with small size, so it's effectively neutral, I guess. But as I've already said, didn't want to risk this coming all the way back down here and giving back, well, ended up giving back all this profit plus a stop out. So I have currently opened a small short position on this, looking to write this down for a few days and then flip long again, targeting much higher levels. I also think whenever we can find this daily cycle low, I think we can call this one here the 26. That seems the most reasonable. So perhaps at the end of November, in a couple of weeks' time, we can find a cycle low somewhere. And I think not only can we get very, very long and strong for gold, I think it will become the time to entertain buying silver. This is a very muddy chart, but really, for me, it's all about that level there. I think if we can sort of come down here, get a bounce, and then move up higher, perhaps with some sort of trend line break, something like this for silver, then I think we can go long here with silver as well. So we'll see how this goes. Targeting 30 odd bucks per ounce, I would suspect, maybe at least 27. So no clear sign for me yet, but I think if gold is going to do what I think it's going to do, if the dollar is going to get its dead cat bounce, then we should see silver make a push up much higher. I'll clean this chart up in my own time so that we can see what's going on. But as you can see, we like to take these breakouts and they often work pretty well. This one failed. Apple still kind of hanging around break even, a little bit of profit. So long and strong, continue to push. Tesla just about hanging on. If this gets stopped out, then we're just going to give up on this, I think. Oh, excuse me. Redraw this trend line here, and then maybe if it breaks out, we can entertain taking that long. Patience has kept us out of taking some pain in these positions, so I haven't got Marathon or Riot, as I've been saying. Been looking to add these to longer term accounts, but as I keep saying, haven't bought those yet because I want Bitcoin to recover its Wyckoff spring. MicroStrategy, is this the bottom? Are we going to continue to average in? So at the moment, very bad entry, but if Bitcoin can recover its spring, we can average down, and that will bring this entry down to here somewhere, so then it won't look so bad. So at the moment, we'll continue to hold this. I don't want to lose this level. If we lose this level, that's going to be really bad. And the same is true of Coinbase, similar sort of deal. So if I can get a recovery for Bitcoin, we'll average this position down. This will end up coming down here somewhere like that, and then it won't look so bad. But remember the saying, okay, losers average losers. You don't want to do that. That's not a good habit to get into. It's just that I am very bullish on Bitcoin, especially if we can recover those levels that validate the spring. UKX looks like it really did back test this blue line. Looks like it's probably ready to move higher. We got a higher high, but it didn't close above there. So the early signs are there that this wants higher. Dow Jones, this is quite a constructive look, I think. Speaks to consolidation before a move higher. It could also speak to consolidation before a move lower as well, remember. So we have to be open to that. In fact, I'm probably not even going to allow it to stop me out here. I think if we get a daily close below this red line, then I'll likely take it off and then re-enter as we recross the red line again. So just so you know, you can manage the trade. You don't necessarily have to even give a whole stop here. But NASDAQ, again, kind of constructive. I also like the look. If I draw one of these right into this level, aren't we? This was, look, resistance, resistance, breakout, retest. Now we're sort of right into it. So this big horizontal level, color this green so you can see it. This is obviously a big level. You know, we bounced off it here, wicked it, resistance. You know, we were chopping around this level. Again, we stopped here, broke through it, resistance, broke through it. So I think this sort of neighborhood is quite a big area at the moment that we're working on. Don't need this anymore. Don't need this anymore. Oh, I will leave that because it shows the entry. But for me, this green line, if we can hold this green line and get above here, then this red line becomes up here, and that is the sort of final barrier that we got to get through before I can say that this melt up is indeed coming into play. Tech should start to play catch up, but of course we are right into some pivotal moments for the equities. Kind of the same deal for the US, isn't it? The S&P 500, excuse me. It's, you know, we got this trend line. Maybe you could maybe draw it like this. Either way, there seems to be a new cycle unfolding. If we can get a move higher up towards this 4100 to 4300 range, I feel like that would be the most reasonable. That would at least bring in enough breakout traders above this line to be able to distribute what was bought here up here. So that makes sense to me. Obviously rolling over here would see that VIX chart breakout, and perhaps then that opens up a lot more further downside. So everything is kind of, as far as I'm concerned, everything looks constructive at the moment. I'm not too worried about anything. I'm certainly not viewing this as, oh no, this is the end of the world. I certainly don't look at the Dow and say, that's it, we're going lower. I think if we were going to go lower, I mean, there's nothing to say we couldn't plunge on Monday, but I think if we were going to go lower, we would have probably done it by now. You can see we spent enough time above this level, and we've got big green candles coming out of here. This doesn't look to me like a swing high, like a swing high. Like a swing high. It doesn't really look like that at the moment. I would say this looks rather constructive, technically speaking. So I'm not overly concerned. The Nasdaq is certainly lagging, but again, this doesn't look overly concerning to me. I think particularly if we can open up strong over the next week, if we can get above this high, if we can hold this green level, then I don't really see any reason to be too concerned about this at this stage. Oil, I think we could possibly long out of this. I've got a feeling that we can long out of here. So, and then go short later on when we get to the 100. Maybe this is going to end up looking like more like this. Okay, this chart's getting a bit muddy, so I'll clean that up. So I wonder if long out of here is the way forward. I wonder if this is a trade. I would not be surprised at all, to be honest, if this could be a trade on the way up. I like the risk reward of this, and then perhaps we could short if we can get up as high as the high 90s, 100s that I've been calling for. Perhaps that's a thing. So anyway, if I tell you I'm getting ready to go long, expect to see me go long if we can get a breakout of here, perhaps in the week. If you found value here today, I'd appreciate it if you could drop a like on the video, subscribe if you're not already, turn the notifications on if you want to see how I deal with these markets in real time as a pro swing trader. In the meantime, enjoy your weekend, take care from me, all the best, cheers, bye.